You're wondering what the hell is going on in the real estate market? Is it crashing? Is it gonna go up? Is this temporary? Is it about to turn around? Is it gonna go deeper? How deep will it go? More important, who is to blame? And today we're gonna talk about the iBuyers, Zillow, Redfin, and the role they have played in the market and what's moving it now. Let's get after it. Hey, if this is your first time to the channel and you want to know everything there is to know about eating, sleeping, working, playing, the good and the bad of living in Atlanta, Georgia, or in this case, the real estate market, well then subscribe below, ring the bell for notifications so you can be the first to know about the Atlanta market, the market in general, and when we release new content. My name's Denny. The team and I get calls each and every day from people just like you looking to make the move to Atlanta, and we absolutely love it. So whether you're moving next week, next year, or anytime in between, call, text, email, schedule a Zoom, and we'd be happy to help you make a smooth move. As I mentioned in this video, we're gonna be talking about what is driving the real estate market. Is it gonna go up or down, and who's moving it? We're specifically gonna zero in on iBuyers. If you don't know what an iBuyer is, it wasn't like an investor, like a house flipper that would purchase, renovate, and resell homes and kind of have an individual underwrite and analyze each individual home. Wall Street and big institutional investors, they syndicated all this money, and then they came into markets like Phoenix and Atlanta, Dallas, Houston, and others, and they tried to use an algorithm to kind of price homes, and they would buy homes at a little bit of a discount. That was the original business plan, to then relist those homes, and the value proposition for the home seller was supposed to be convenience. It's like, hey, skip all of that stuff where you list your house and get the most money for it and just take a discounted offer, and then you can go ahead and move along your merry way and buy another home. And that kind of worked a little bit when both the stock market was on fire and it was going up, the real estate market was going up month over month. And let's face it, do you really need a realtor or an algorithm when everything goes up? I mean, you could throw a dart at a board or a neighborhood, pick a home, buy it, wait, and then it would appreciate. That might have sounded like a good thing for a moment, but as we are relearning, real estate, like all markets, are cyclical. They go up and down, and they are impacted by outside forces. And so what I want to do is I want to talk to you about why Opendoor lost $1 billion with a B. Why Offerpad is being threatened. They've already got their notice that they're going to be delisted from the stock market if they don't get their stock up over $1. And as I'm recording this, they're trading at just 66 cents a share. That is down almost 100%. I want to say it was up $20, $30 at one point in time. And so that's down a lot. All the stock market is down, maybe 20 to 30%. All real estate stocks are down, but they're not almost going to zero. So they're about to be delisted. Really, the story I want to talk about today is Zillow and Redfin and what's going on there. Before I dive into what went wrong, let me explain why the market, and it wasn't just their fault, but what was driving the market up. So there's a couple of things that led to the real estate market taking off. One, during COVID, there was like $10 trillion of quantitative easing where the Fed pushed this money out into the marketplace, hoping that they could stave off a recession. And what happened is people with or without jobs, it didn't matter, COVID or no COVID, there was a wash with money. And they took that money and they're like, oh, well, I want to go buy a house. But now, because of COVID, they could work remotely. So they started leaving the West Coast. They started leaving the Northeast. They started migrating towards the Southeast, towards the Sun Belt, because they had the freedom of geography. They could go wherever they wanted. So they've got a ton of access to cash. Interest rates were really, really low, like under 3%. So money was cheap, access to cash, the ability to work remotely. And so people began to flock to Dallas and Houston and Phoenix and Atlanta and Charlotte and Florida, Tennessee, everywhere, right? Supply and demand was driving prices up. But simultaneously, you had these iBuyers with billions and billions and billions of dollars, and they started to abandon their model. They started to try to compete and get ahead of the open market. They wanted to grow. They didn't have to make a profit. All they had to do was keep their investors happy, and these investors were investing in future profit potential, not today's profit potential. So all of them were really losing money. And so they weren't looking at, we buy a house, we make a profit. They started looking at, like, how many houses can we buy? The more houses that we buy means the more houses that we sell. The more houses that we sell equals more revenue. More revenue means that our stock price goes up and the people that work there, we're getting wealthy financially because they had a lot of stock, but the company itself was not healthy. It wasn't making any money. But in this growth mindset, what happened? All of them that I mentioned, all these iBuyers, they started trying to compete with everyday people, with the entire market. They weren't even making offers under value. They were making offers over the market value. I personally lost listings to companies like Zillow, who literally offered to pay my seller, my client, more money than I could even remotely justify telling them that they could get it. If I listed it, went through all of the marketing, put it on the market, even had them do some renovations to make sure that it was in the, put the best foot forward and presented the best product, even with the best product and the best marketing and everything, maybe I'd hope to get them ABC price, and Zillow would come in and literally offer them 5% more. So now they had abandoned the offer a little bit less, hope to buy it for convenience, and all they wanted was growth. So they started to overpay over the market for properties. All these companies did. And what happened is it started to drive the prices up even more. So you had easy access to money for everyone. You had low interest rates. You had people being able to work remotely. And so that caused like the overall market, regular buyers and sellers turned into a seller's market, and that you had all these buyers competing, and then you had billions of dollars of institutional money coming into these cities and outbidding your everyday home buyer. And then the first time home buyers, they started to feel like, oh, I'm never gonna have a chance to buy, and so I gotta get something, and now if I don't get something now, then it's not gonna happen. And so they would throw caution to the wind and they jumped in, and what happened is it was like the perfect storm, and real estate prices started going up in some of these markets 20 to 30% year over year. Real estate should grow at the rate of inflation. Well, regular inflation went to 8-9%. Real estate inflation went to 20 to 30% year over year in these markets. And so it was really driving it up. And then, as always, what goes up must come down. And so here's ultimately what went wrong. Zillow in Q3 of last year bought, I want to say 5,000 houses in one quarter. They overpaid for 5,000 houses. By Q4, they were completely out of the business. Let me explain what happened. So Zillow decides that they are going to shut down their entire iBuyer program on a dime. They realized that they are hemorrhaging money. They had to write off $540 million in losses. At that point, they had, I want to say 8,000 homes. They had just bought 5,000 homes in Q3. They had 8,000 homes in their inventory that they had to unload. Well, what happens when someone that owns 8,000 homes tries to sell them in a short amount of time? See, lucky for them, the market still cooperated and they were able to kind of get out alive. They were able to abandon the iBuyer program and refocus on their core business, which is what they've done. We'll see what the future holds for Zillow. I'm sure that Zillow will survive in some shape, form, or fashion because they have a huge brand recognition and they can pivot. But you had companies like Zillow that even though they're gonna survive, they laid off 25% of their workforce. They laid off over 2,000 people, sold 8,000 homes, and lost $540 million. Now that is huge, and that has started kind of this shift. Now, we all know that the Fed has raised rates, and as rates go up, purchasing power goes down. So if you qualified, if you were borrowing money at 3% and then it was 4, 5, 6, your budget has to go down. So that put downward pressure on homes, right? Well, here we go again. Now Redfin has admitted that the iBuyer program is absolutely unsustainable and that it was just a bad idea. You have Redfin CEO Glenn Kelman has said recently that they own like $350 million worth of real estate that you and I wouldn't want to buy. Now, I don't know about you, but that's not a very positive statement. And so this is a recent update. So now Redfin is following suit from Zillow. They are completely getting out of the iBuyer space. They have to sell $350 million worth of homes. Get this, they've committed to do it in the next 6 months. What do you think that's going to do to home values? It's again going to put downward pressure on these markets where Redfin has a big presence. One of those being Phoenix. In Phoenix, iBuyers at one point accounted for 10 to 20% of the purchases of homes. And guess what? They now account for 10 to 20% of the selling of homes. In Phoenix alone, iBuyers own over $1 billion worth of real estate. So as they try to keep investors happy, as they try to minimize their losses, unlike you and I and normal people that own homes, when you have a home and you want to sell it, it's usually like it's your largest asset. It's where you have the most value tied up and you have emotional ties to it. And a lot of times sellers are hesitant to take offers lower than what their expectations are. If you're a seller right now, you're not going to get what you were going to get 6 months ago. And so it takes people, their mindset, a while to catch up. But iBuyers, think about this, these billions and billions of dollars of inventory they don't have the emotional attachment to homes. They are now going to start selling homes as quickly as possible. Zillow unloaded 8,000 homes. Redfin is going to sell $350 million worth of homes in the next 6 months. They're laying off 862 people. And so iBuyers played a huge role in the upward pressure of real estate prices. Again, they weren't the only ones. You had low interest rates and easy access to money and a stock market that was way up coupled with these iBuyers. And now you have exactly the opposite. You have interest rates that have gone up at least double in the last 6 to 8 months. You have a lot less access to capital. The stock market is down 20 or 30% depending on which indice you're talking about. And these iBuyers are selling and it's putting downward pressure on the market. Now, it depends on who you ask as to how far down that's gonna go. Have we reached the bottom? What are interest rates gonna do? It looks like the Fed is easing up. They're not raising rates as much. It looks like the mortgage, so the Fed fund rate and mortgage rates are not tied together. They do kind of move in the right direction, but a lot of it is how people think the future is going to go. So rates have kind of come down a little bit from their peak, the spike. Who knows what they're going to do in the new years? Who knows what the overall stock market's going to do? The job market is still really, really strong, and so that's kind of propped everything up. People still have jobs. People still have paychecks, so they can still pay their mortgage. So we haven't seen a crash that was just like astronomical where there's tons of foreclosures and tons of inventory. Inventory is up 100 to 200% in most places. Days on market is up from like a week to a month. We've gone from like less than a month of inventory to sell to now, 3 months or more. And so a balanced market is closer to 6 months. So we're still not in that buyer's market. We still haven't seen prices come down, but the last crash, depending on the market, was about 20 to 30% from top to bottom. We've seen flattening, a leveling off. Prices in most markets aren't up 10-20% from last year, and they're not down. Some markets are down as much as 5 or 10%. Those are the markets that people have been leaving, and the hottest markets have cooled off. So haven't seen prices crash. Will they? Only the future will tell, but I can tell you this, all of it is being influenced by this trend in iBuyers. And again, Offerpad threatened to be delisted from the stock market if they can't get their share price up over $1. Opendoor losing over $1 billion. I want to talk to you about one example of a major misstep that Redfin made in the market shift. Like I said, Zillow had kind of gotten out of the market. They were selling all their houses. Redfin was still buying, and they didn't quite see the shift coming. Just back in April, Redfin purchased a property for $600,000. And just a few weeks later, they actually put that property on the market for $625,000. Now, if you'll remember, back in that April, May 2022 timeframe, that's when interest rates really started to move up and the market kind of started to shift, and they didn't see it coming. So that home did not sell for $625,000, so they started to lower the price. And after a series of price reductions, just in November, the property was taken off the market. The last listing price that it still did not sell for was $525,000. That's $100,000 less than it was originally listed for, $75,000 less than they paid for it. And like I said, the home is still not sold. So that was in the Las Vegas market. So again, companies like Redfin were really caught in that shift, and it's really uncertain as to whether or not this iBuyer concept is going to survive or what exactly it will look like in the future. The good news for buyers is you're gonna have more inventory to choose from. You're gonna have more leverage from a negotiation perspective. You're gonna have a lot more options, and so the seller's not gonna have all of the negotiating power or the leverage. The bad news for sellers is you're not gonna have the prices. You're not gonna sell for what you would have 9 months ago or a year ago. But I will say this, if you are gonna sell your house anytime soon, or if you even remotely thought about it, you should seriously consider, like, while you may not get what you would have 6 to 9 months ago, do you love your house enough to stay in it for a number of years if the market goes down further? Or is this your last chance to kind of get out while you can? Here's the way I look at it. I bought a house in May at the absolute peak. Now, I did that with my eyes wide open because I wasn't moving across the country, but my wife and I, we have 4 young children, and we wanted more space. And we found the perfect property for us to spend the next 15 to 20 years. So we made a long-term decision, and we're not really concerned about the short-term movements in the market. But I'd say if you are planning on selling, or you are thinking about buying, and you want to have a specific conversation about your circumstance, if you're relocating across the country, or if you're just here locally, then as always, give us a call, shoot us a text, send us an email. Be happy to talk about your individual situation so we can help you decipher what is best for you. So that's what's going on a US perspective. Here's what I would encourage you to do. If you haven't already, obviously subscribe below, ring the bell for notification. We want to be a resource for you and bring you content and information like this. Hopefully you find value in it. But if you are considering making a move to Atlanta, whether it's next week or next year, anytime in between, call, text, email, schedule a Zoom. Stay tuned. My follow-up video to this will be exactly how all of this plays a role in the Atlanta market, and you will be surprised at how well Atlanta itself has held up thus far. It wasn't as bubbly as some of those crazy markets, and it hasn't cooled off nearly as much yet, but there is a silver lining. And if you want more on the exact Atlanta market stats, stay tuned, and we'll see you on the next episode.